Spotlight then for this evening. Another organization which has decided to maintain status quo is the European Central Bank, which left all the benchmark rates unchanged, which means the mean refinance rates remains at zero for now, while banks will have to pay to keep money parked with the ECB. Meanwhile, its corporate bond buying exercise will begin from the 8th of June, and the first asset purchase under the series of LTRO will begin from the 22nd of this month. But what's kept the entire European markets on tenterhooks, including the ECB, is the possibility of a Brexit, which the bank's president Mario Draghi says will have a profound impact on the continent as a whole. But the ECB is ready with a contingency plan.
The UK and Europe and the Eurozone are mutually beneficial. So the ECB has a view whereby the UK should remain in the European Union because the European Union would benefit from its permanence, and we believe that the UK too would benefit from staying in the European Union. The ECB is ready to all contingencies.
The OPEC meeting in Vienna today ended with little drama. The meeting of oil ministers broke up without a deal on production caps. That's not a great surprise given Iran's opposition to the supply curbs, which some countries, including Saudi Arabia, have apparently been pushing for in the past. OPEC has cut production to drive prices higher, but the dynamics are different now. Iran has just broken away from the burden of Western sanctions and, of course, wants to export whatever oil it can. So the status quo remains there. And in fact, there was one, however, important announcement on all of that. That is Nigeria's oil minister, Mohammed Barkindo, has been appointed as the new Secretary General of the OPEC. Hadley Gamble joins us now from Vienna to give us her insights from the OPEC meet.
A lot of speculation going in today's meeting of OPEC members, and it was interesting to note that everyone seemed to have a different opinion of what was going to be on the agenda. Everyone from the UAE oil minister as well to Mr. Al-Bradri himself about what was actually going to be on the table. But at the end of the day, there's going to be no output freeze, no cap on production as of yet. They say that that's being pushed off potentially to December. And essentially what we heard is that there is a new Secretary General of OPEC. That's the Nigerian candidate. I had the chance to speak with the Saudi oil minister in his first interview to media since becoming Minister of Saudi Arabia's energy sector. Here's what he had to say.
We are extremely happy. I think the market is in good shape. The market is balancing. Trends are all good in terms of supply and demand. Prices have recovered somewhat, and I believe they will continue to recover. The spirit of the meeting is very cooperative, collaborative, and all of the ministers see basically the same fundamentals.
Now, of course, there's been a lot of controversy surrounding the relationship between Saudi Arabia's oil minister and Iran's oil minister. Of course, with the coming of Khalid al-Fallah, the new minister, the former CEO of Aramco, a lot of speculation as to whether or not that was going to actually promote a more conciliatory tone amongst not just OPEC members, but in terms of that relationship itself.
Thanks for that, Hadley. And let's listen in to the president of OPEC, Saleh Al-Sada, on the dynamics playing out in the oil market.
We've seen the production of Iran increasing, but concurrently we've seen also the price is recovering. The production of oil in OPEC, while it is increased, but it seems that the market needed that oil, and it is helping the rebalancing of the supply and demand worldwide.
And to get the bigger picture on the big picture from all that we've heard so far, I'm now joined by Richard Mallinson, the geopolitical analyst at Energy Aspects in London. Hi, Richard. Would you say that this was a colossal non-event?
Hi there. Well, I think expectations going into the meeting were very low. We had a little bit of excitement yesterday as some proposals were being talked about. But of course, very little has come out in terms of the formal communique, the decision. A few things that are important. Firstly, OPEC is still alive. The group is still talking. Some of the groundwork for future cooperation was laid today. And the second thing is the Saudis. They came out very firmly saying that they're not about to flood the market. They're not about to surprise the oil market by producing a lot more oil unless it's needed by their customers. And that really is important because there had been a lot of speculation over the last month or two that they might be about to change their policy.
Well, indeed, I mean, they are talking, and I think that is what also, many are saying is perhaps the problem. They are talking, and many are in fact even questioning OPEC's relevance today. You still believe that OPEC is very, very relevant, despite the fact that the interests of different countries do not merge, and at least, as far as interests of Iran and Saudi Arabia are concerned, pretty much look irreconcilable at this stage.
It's a really good question. We absolutely do have a gap, and that gap was on display again today between the Saudi position, the Gulf states, and between Iran in terms of willingness to compromise. But I still think we saw some seeds of future cooperation emerging. Nothing else. They agreed finally on a new Secretary General, but also look at the tone of all of the comments after the meeting, including the Iranian oil minister. All of them were very keen to stress that it had been a positive meeting and also that the market is moving in the right direction. It doesn't mean that even in December it will be easy to find a basis for compromise, but I think we're slowly getting closer to OPEC being able to work together again. And I definitely think that suggestions that the group is about to collapse or is irrelevant are wide of the mark.
You indicated this at the start, and I want to just get your views on this in terms of what does this really mean? The fact that Saudi Arabia has indicated that it will not be flooding the market. Do you see a change at all, a subtle change in the stance of Saudi Arabia? How do you interpret this?
Well, I think the only real change we saw was how much energy the new Saudi oil minister put into working with colleagues over the last few days. He's been in Vienna, he's been holding extensive conversations. And I think the expectation was that he would actually be less engaged in that kind of oil diplomacy, that OPEC relationship building than his predecessor. The fact that he's willing to commit to that suggests that Saudi Arabia is still very committed to its membership of OPEC. In terms of production, I really think we're seeing consistency in the Saudi oil policy. We've changed ministers, but we have the same policy. They aren't about to flood the market. They aren't about to increase their productive capacity. And that should hopefully allay some of the speculation that has been so widespread in the market recently.
I'm curious. I mean, this change in stance that you're sort of indicating of Saudi Arabia, is it also because of this, this realization that may have dawned upon them that the central role that they played in the OPEC, that may also be sort of quickly, disappearing? I mean, they despite the fact that they might be the largest oil producers in the world and by far the largest as far as OPEC is concerned, the earlier, traditionally, the central role that Saudi Arabia has played, that is not the case anymore today.
Well, I think their involvement in the oil market is changing. We've had trends like the emergence of US shale, but I think they still have a very important role, in particular because they're the only country that holds significant amounts of spare capacity. That's additional production they could bring onto the market if there was suddenly an outage, if there was suddenly a need. But I also think Saudi Arabia and the other members of the group do still realise that being part of OPEC is better than going it alone. So even though they may not have been able to reach agreement on a collective quota on much of substance today, I think there's still an awareness that building the group up by maintaining and rebuilding its credibility in the eyes of the market is something that's valuable to all members, including Saudi Arabia.
What does your own analysis tell you? Which way is oil prices headed, in 2016? I know it's notoriously difficult to predict, but give us a sense. What does your analysis tell you and why you believe what you do?
So for a long time, we've held the view that prices are going to rise significantly over the course of this year. We see by the end of the year reaching back into the 60s for both Brent and WTI. The reason for that is we think there's a structural tightening going on in the market. Demand is holding up well, with Indian demand particularly strong, but on the supply side we're seeing lower investment cause reductions in supplies in many countries, and now we're seeing a wave of outages in places like Nigeria. all of that means that the oversupply that we've gotten so used to in the oil market is rapidly evaporating. In the second half of this year, we'll actually be drawing on inventories, and that's pushing prices higher already.
Well, if I can assure you one thing, if oil price does reach $60 a barrel, the Indian government will have a lot to worry about because, considering the fact that the amount of crude oil that we import and the fact that the crude oil the valuation has been so low, we have actually benefited immensely from that. So $60 a barrel is what you're saying. It's interesting because many of the analysis that we've been reading and many people who've been on our channel before this, they still believe that the days of $30 a barrel is not behind us. And they also, in fact, said that the recent spike in oil prices was primarily due to the outages in Canada and Nigeria, and the fact that the overall China is still sort of going through some kind of a slowdown, so demand from China will remain low. But you still believe it's going to be $60 a barrel possibly by the end of this year, let's say.
Absolutely, and just to quickly answer on that, I think on the supply side, US shale is going to be slower to respond to higher prices than many people are expecting. On the demand side, we're seeing very good demand across the region. Only some of that is price sensitive. For instance, in India, I think the consumption taxes that the government raised when prices were very low can be brought off, and that would help to mitigate the impact on the retail prices of fuels. And also we've been seeing quite a strong boost to demand from the terrible drought conditions that have been so prevalent in the region. So that's helped push our demand estimates higher. And so I do think, yes, the recent outages, the temporary losses from places like Canada have played a role, but I don't think all of the price recovery so far has been about that. And I think as we get into the second half of this year, we're going to see the tightening in the market become increasingly evident in the data.
Richard Mallinson, thank you very much for joining us here on The Big Picture and taking us through your analysis. Important words coming in there from Richard that he expects the oil prices could hit $60 a barrel because of some structural reasons. So we need to really wait and watch. And of course, the government will be watching it very, very closely.